Welcome, everybody. Thank you so much for taking the time this afternoon to join us for our Business Sense of Boot Camp with Comerica Bank. This is part one, as I understand it. And so we are going to be talking a lot about making the financial adjustment. And I think regardless of where you are in your business plan, this is going to be really crucial information that you certainly need to know. And today our guests, I'm going to actually have them introduce themselves. We have Michael and also Marci from Comerica Bank. So Michael, if you could share with us what you do and give a little insight on what you're going to provide for our participants today.
All right, great. Thank you. My name is Mike Demartelaere. I'm with Comerica Bank. I'm in External Affairs and Community Investment. And so what I've been doing, especially during the pandemic, is working with nonprofits just like Grow and providing financial education across the board to everybody in multiple veins. And Zoom, as we know, is now becoming the fast and furious for everybody versus a classroom scenario. And so I want to thank everybody for attending today. And Marci, I'm going to turn it over to you.
Sure. My name is Marci Chapin, and I work for Comerica in our business banking group here in Grand Rapids. And I have worked in various roles for Comerica, including a branch manager and business banking over the years, and have been involved with Grow in various ways, mainly reviewing loan applications. And I'm currently working from home, working remotely as all of you, and have been working with clients for the last several months that way. So looking forward to our seminar and hopefully some question and answer, and we'll go from there.
It would be great if we can use the chat box right now to kind of share who's on this call. That would be wonderful for our speakers throughout the process. I took off the screen share just for a moment so you could see our speakers, and so you know a name to a face and that sort of thing. But I will be going back and forth so that you can see the speakers. You can also see the presentation, and feel free to take notes. I believe, Rosie, we are recording this, and we'll be able to share. Will we be able to share this particular presentation with others?
Yep, right afterwards I will send out the slide deck.
Okay, so go ahead and share with us who is on the call right now. It'd be great to see everyone's name and where they are at with Grow. And as they're doing that, I'll go ahead and have Marci and Michael go ahead and begin.
All right, thanks, Jen. So today we're going to be talking in the boot camp about credit and how credit history is so important to individuals as they go through the path. And so if you want to go to slide 2 there, the slide 2, there you go, thank you. And really we want to have 3 questions that we're kind of looking at: reading and cleaning up your credit report, how do you prepare yourself to access that credit that's out there, and then how does history affect your business operations and affect yourself personally. So if you want to go to the next one there, thank you. So really, everybody knows the definition of credit, but I tossed in there a piece about it because when you're in business, some credit is not just money, but you're able to borrow goods and sell them before you have to pay for them. So if you've had restaurants typically are able to purchase their product that they're going to sell to consumers before they have to pay that typically. And they usually get 2 to 14 to 30 days usually on a revolving credit line. So we'll go over about that a little later in the presentation. Now, if I'm going too fast, someone put something in the notes and I will slow down. So now we want to talk a little bit about personal credit history versus business credit history. Because personal credit history is a record of your use of credit reported to consumer credit reporting agencies. Everybody typically knows the 3 agencies: Equifax. Oh, now I can't remember the other 2 because I didn't write them don't have them on my slide.
Experian and TransUnion are the two others that are fairly well known.
Those are the three. Those are the three big ones. Versus your business credit history is a record of how you handle your debts and financial obligations, and they're reported to different agencies in the personal credit units. So we go to the next one. And this slide is just giving you an idea of how credit is so important to a business, because you need to access financing, because you might be buying inventory, you might be machinery that allows you to, of course, use that purchase of equipment to manufacture inventory. Also, you can use that credit as working capital, meaning you use it for seasons where you slow down. So if you're an organization that may be heavy in the spring, say you're a nursery, and as we know, from the months of March to about the end of June for the nursery business, you're really, really busy. So you need to build up your inventory to have it in place, but then you sell it all. So during your lean months, you might use your working capital to do payroll. So it helps you manage your cash flow throughout the entire business cycle for you during the year. So if you want to go to the next slide. And so this is an interesting slide. It talks about your personal and business credit spectrums, meaning age and growth of the business. If you're just starting out looking at building your business, you're going to rely pretty heavily on your own personal credit or credit that you might borrow from friends or family until you get established. A good story about that is I had actually someone came in many years ago and asked me for a loan on electric windmills. And as you know, if you drive around, you see the large windmills. And so I asked them a couple questions, and they were just getting off the ground. They didn't have a business plan. They didn't even know how much a windmill would even cost to purchase and how to negotiate to put that into play to generate revenue. So developing a business plan at the very beginning and then managing that initial credit that you're going to use to grow your business is very important, because as you grow it, then you can start looking to develop relationships on the lending side with small business lenders like Marci.
Could I ask a question, and I'm sure that's probably on the minds of many. Say your personal credit is not so great, but you have this fantastic business plan, you're solid in what you want to do. What are the chances that you're not going to be able to really fix that personal in order to get your business to where it needs to be?
That's a great question. So when you're looking at credit scores, and we get farther in, we'll talk about credit scores and how that affects the overall credit spectrum. The lower your credit, we'll talk about the lower your credit score, unfortunately, means you're going to be a risky or more risk to the individuals who are looking to borrow you funds, which will cause a higher interest rate if they determine to lend on that, on that score. And you can have an impact where you might have to figure out ways to review your credit and look at it and how do you increase your credit score before you move on. Now you can work with Grow, and because each institution has different standards, their standard may be different than a typical bank or credit union. So that's why we partner with like Grow, because some cases at the very beginning, Grow is able to help that small business get initial financing because they work with very startup companies, usually the banks and credit unions. We have a requirement that you have to have business financials. You have to show us that you're making money. You have to show us that you can pay us back the money. Grow has those same requirements, but they have the ability to look a little deeper and work a little broader than the banks are able to. And the last part of this is you get very sophisticated, then you might not have to have your personal credit history involved. So if you want to go down to the next slide. Marci, did you want to throw anything else in on top of that?
Well, just referring to what Jennifer said, I think that if you are a person that has that business plan, I think the first thing you should be doing before you're even to that point is reviewing your personal credit and looking real closely at the scores and making sure they're as high as they can be, because it will be probably, you know, if you're working with a conventional bank, a primary factor in being able to gain, you know, the initial credit amount. So I think it's important that people know how to pull their own score, that they can look at the components of what's in the score, and sometimes even work with a credit, you know, service to improve your score. There are different ways to do that, and I know Mike will talk about that, but it really is, from my view, the kind of what gets you even started is you have to have a pretty strong credit score. So if you're not there, you've got to start with working on that first.
Perfect. Thanks, Marci. So if you want to go to the next slide there, thank you. So some of you may have or may not have applied for a business loan already or in the past. And so the question is, you know, what kind of information did they ask for? Because it's going to be much different than a personal credit score. Because when you go to get your personal credit score request, you know, they're going to go to the 3 reporting agencies, and that's going to pull right up. And we're going to talk about the differences between a personal and a business information in a credit score, just so you can see what that looks like. So you go to the next. So here is, you know, what is a personal credit report? It tells, you know, the lenders, you know, who you are, how much debt do you have, how long have you had it, how frequently have you applied for credit. So when they look at your credit report, they can see if you went shopping for that car to 5 different lenders. So they can see frequency. They'll notice if you're making on time or late payments, and if there's negative information on that report, such as bankruptcies and foreclosures. And so now this slide is this on your credit report? And it's kind of like I'm asking you, do you think all 13 are there? Or do you think that number is smaller based on the conversations we just had? So you can go ahead to the next slide. And here in the deck here, Marci, I couldn't remember, and here it is on this slide, the 3 major credit reporting agencies for individuals. So this is in the slide if you need to forget, like I do sometimes, just to be there for you. So we can go down to the next one. So this is your personal credit report information. So this is listing out everything that you can expect to see on a credit report when you pull it. Your name, your social security numbers, typically it's the last 4 digits, it's not the full social security number. You know, your current and previous addresses. I forget how many addresses they'll list. I know one credit report had the 3 last places I lived at, and I lived in my regular house for over 20 years, and they had something I lived in like 30 years ago. You know, date of birth, if you have a telephone number that's out there, employers, how many open credit accounts do you have, how many closed ones do you have, did you have any charged off, do you have any in collection, and then of course consumer statements. So that sets up the majority of what is in your credit report. And of course, look at bankruptcies and foreclosures. So, you know, on the other slide, it said your credit card, you know, your cell phone plan payments. It's not on there. which is slide 9, is what I'm talking about. It doesn't have a debt to income ratio. It does not look at traffic tickets and fines. It doesn't look at your savings account. It doesn't track debit card purchases because that goes against your credit card. So if you want to go ahead and go down to the next slide there, around 12. Thank you. And like I said, here's a listing of what's not going to be on your credit report. Another one is medical history is not there. If you have a business account already, that's not going to be on there. Race, gender, religion, or national origin is not on there. Of course, driving record and marital status is not on your credit report. If you want to go ahead and go down to slide 13, please. So I think it's important for everybody to understand how is your credit report created. And so these are the major components currently that the 3 major credit agencies use. 35% is based on your payment history. And I can't stress hard enough or long enough that payment history is probably a huge number into your overall score. As you can see, 35%. And then 30% is now looking at amount owed. So if it's looking at your outstandings, looks at 10% as new credit, meaning if you applied for new credit and if you got approved. Length of credit card history. So what is the longest credit card that you've had in your credit mix? So I have a good story. I had someone who was looking at a house purchase and they had cleaned up their credit, and as they were cleaning up their credit, they started closing out their cards that they had the longest history with. And that's lowered their credit score by 30 points. And so if they would have left them open at a 0 balance, they would have, say they were at a 700, they went down to a 670. So now, would that have impacted their interest rate on their loan? It might have. You know, another thing I can tell you this story. I went on a cruise and I decided I was going to buy another cruise. And so I decided I was going to get the credit card from the cruise line because it gave me an extra discount and all that good stuff. And when I got home and I track my credit report and my scoring, my credit score went down 30 points because I opened up this card on the cruise. So I impacted my credit score to save some money on the next cruise. So there's, you know, unintended consequences can happen when you're trying to do good things to help your financial well-being. And so if you want to go to slide 14 there. And this just again gives you an idea. There's another scoring service out there. It's Vantage. Scores pretty close to the same as FICO. The only difference is they look at recent credit behavior, and they talk about highly influential versus low. So, you know, they look at, again, past payment history, age and type of credit, percent of credit use are the top 3. And then bottom 3 boxes, they have less influence on their decision process. And that brings me up to something that's brand new, which is the FICO has come up with, they call FICO 10. Excuse me. And I want everybody to know that this is the next slide there. Thank you. And what this is FICO is coming up and looking at how are you using your credit. Before they would look at, are you making your payments on time? And are you making, you know, minimum payments and stuff like that? And you didn't get dinged so much if you're just generating minimum payments. And as you know, when you look at your credit card statements, it'll tell you how many years it will take you to eliminate this debt if you do minimum payments. The new scoring will actually make a difference. It'd be a positive plus or negative 20 when you read this on that score. And so if you're somebody who keeps a balance, and say, I'm just making these numbers up for our discussion, say you always keep a balance of $1,000, and it's not a hardship, but you just make the minimum payments, you're not worried about it. The new FICO score is actually going to look at that $1,000, and because you never decrease it, it's going to give you a negative ranking to go against your score. Now, if you're on the other side and you work at lowering your balances, you're going to get a bump in your score in the new rules. And it just started rolling out as of, I think, June of this year. It's not highly used yet, but it's coming along. If you want to go to the next slide there. And so this gives you an idea, again, some additional reading about the FICO 10T, and it's a trending data. And it's not well known. It's not been publicized very much right now. So we go ahead and go down to the next slide. I just want to give you an idea. And farther down in the deck, there is another sample credit reports that's a little bit easier to read than this, but this is kind of gives you an idea. It starts out with your name, your address, your employers, potentially negative items, but what you have outstanding, counts in good standing, if there's any public records, and who might have, in the very bottom, of course, who might have pulled or asked for, like Visa. You get a mailbox full of credit card statements. This report will tell you who's making soft inquiries onto your credit. So it's important to pull your credit reports on a regular basis, and you can sign up with the organization to get free credit reports. You just need to follow the directions when you do that. Or you can go to the National Credit Reporting Agency, and I have that link farther in the deck. So it's important, as we talk about today, keep up with your credit. Just like Marci said, you need to review it for accuracy. When you see an issue, you need to dispute that error really quick, because you don't know how long it's already been on there before.
Is there any other questions before we proceed on? I know that's a lot to digest. So anybody have any specific questions in regards to this? Marci, did you want to add something?
Yeah, I guess I was just going to add, there's a lot of factors there that come into the score. But I think ultimately it is the payment history. I know Mike said that, but that tends to be the area that the lending professionals are going to focus on the most. So if you're in a situation where you've applied and maybe your credit score is maybe on the lower ranges, if it's due to maybe a lack of credit or a lack of new accounts or maybe availability, I think there's going to be less of a concern than if you have recent late payments. And so I can't, the others are explainable. The late payments are really, really tough to explain. So I guess I as a person that looks at it, because some of this does become a conversation when you make an application, tell us about this, tell us about that. So ultimately the key is the continued on-time payment history more than any other factor.
Well, given we are in the midst of a pandemic, can I throw this question out there? What if, due to certain circumstances, this is unprecedented that we've been able to, watch happen. People are losing jobs and maybe investing more in what they hope to become a full-time business, and yet their credit score is going down. I don't want those people to be discouraged. And I know you probably feel the same. So Anything you want to add to that maybe they should keep in mind as this process is happening, where, you know, what things they should really do with their credit report if for some reason they're laid off right now and they can't make those regular payments?
Well, I do think that if they've contacted the bank for, or the lending, agency for a deferral, I'm not sure that the deferrals are being reported at this point. So I think that was part of the accommodations, for the pandemic time period. But, having said that, I guess, emergencies happen, and this is the biggest one we've ever seen, at least certainly in the last 10 years. So it's always important to have a good financial cushion, an emergency fund. And I'd like to say that that's different in a situation like this, but ultimately that's why you want to have 3-4 months of cash or savings that can cover payments in case something happens. And certainly I'll tell you this, in February of this year, nobody ever thought of this. I've done this for 30 years and I've never thought of a pandemic affecting people and their ability to pay. But the customers that have done well are the ones that have, good cash reserves, have lines of credit available to them as part of their business planning, and have kept their debt payments low so that they can manage through any emergency, this one being the biggest one that I've seen. So I'm not sure if that helps, but
it gives people a little hope that, it's still doable and that you can still push through. And I love the point that, reach out to your bank, right? When you're in these situations, it's the communicating instead of the avoiding, right?
Oh, for sure. That is a much better way to go. Getting with the bank, explaining the situation, coming up with a plan is always better than just not making the payments. Always.
Okay, anybody else have any other questions? All right, I'll go ahead and let you proceed.
All right, thanks. And I want to emphasize what Marci said. Please call those organizations that you might have an outstanding debt with and talk to them. They have programs out there that will help you navigate this. I can't tell you what they all are because there's so many of them, but they're aware of the situation. They don't want you to default as much as you don't want to default. So the conversation that you can have them up front with them creates that goodwill that will help you move forward in later stages when things turn around for you. So we'll go down to that next slide there. So this is just, we'll go down to that one. Just shows how important your credit history. So we're on slide 20 there. Yeah, there you go. Thank you. How, credit, can grow with you as you grow your business. You're going to start out, you're going to need that business plan to help you establish your new business. I'm going to guarantee that when you are looking to borrow money for your business, if you're doing a credit card, that's a personal guarantee. If you're going to do it through a financial institution, they're going to ask for a personal guarantee and or a co-signer on that loan. And as you grow, you can access different styles of credit. There's trade credit, like I said, which is in restaurants and all kinds of other organizations where you can get your merchandise before you have to pay for it, but you want to be in good standing because those organizations are going to go and ask questions. They might send a form to the bank and saying, hey, is ABC Flower Shop, are they a good customer? And the bank's going to tell them no or yes. Hopefully we say yes because they have a great relationship with the bank, you got good deposits, you handle your account the right way. We're also going to tell them when that's not the true picture, and that will impact on that business being able to get merchandise on a credit program. So we'll go down to slide 21. Now we're going to talk a little bit about what is a business credit report. because it's a risk assessment tool to evaluate if the bank or institution is going to provide trade credit, lines of credit, or maybe you're looking to purchase a building for your business or machinery, the finance throughout the life of the business. So we have the next slide. So this kind of gives you an idea, a little difference between what personal information between the two credit reports. As you see, the business report, credit report, it's going to identify your business. It's going to see if there's any business credit history out there, if there's any filings that are on the system for your credit. They're going to do a background check to see, if you're registered with the state. I was just working with the organization that had let their state registration expire, and they were looking to do a PPP loan. Well, because they let their registration expired, they were not in good standing with the state of Michigan, which then caused them to stop their loan application process until they rectified that issue. And you know how hard it is to get hold of folks nowadays in the governmental side, because they're like us, they're all working from home and they have long queues of people in line. These folks are still 30 days later still working through the process of being re-registered with the state, whereas if they would have spent, I think it's $50 every year to make sure that they have their registration in place, they would have already been approved for their loan probably. And of course, public records on business. So we'll go to the next one. Excuse me. So the major players on business reporting, Dun & Bradstreet, Equifax, and Experian Business. And they're, like I said, they're going to focus on how your business interacts with vendors and suppliers, because they're looking for trade credit. That's the one I'm most familiar with, because I worked and ran restaurants and owned restaurants in my past career. And so I was used to going to, say, Gordon Food Service and being able to procure a trade line for food to my restaurant, because I had good credit personally, and then I also had handled my accounts with other vendors correctly, that I had in good standing with those other vendors for food and supplies. So it's very important to know what's in that business credit report also. We can go down to 24, please. Thank you. And so here is, what kind of information is inside a business credit report. Of course, the name, if you're doing an AKA, so say you might have, again, we'll pick on a Nancy's Flower Shop, but she also might be known online as Betty's Flower Shop. So if you'll have your name and any AKA names you might have registered, of course, other pertinent information. You would have any other companies that would have granted credit to you, or on payment programs. It will risk scoring. They'll tell you, your registration, your legal structure, how long you've been in business, all that kind of good stuff. Also, they're looking for the UCC code filings. That's other filings. And Marci, you want to talk a little bit about what the UCC stands for?
Well, let's see, you have it on a uniform commercial code. So it's basically where the banks or anyone will file a lien against a business. And so if they have a lien against your accounts receivable or your inventory or your equipment, it's filed. It's similar to like what you would think of a mortgage on real estate, but this is just how a lien filing is handled for an asset of your business. So you can pull a UCC search and UCC record for a business just like you would be able to pull a title search for a piece of real estate. It would show you all of the entities that have filed any sort of lien against a company. And it's pretty normal to have multiple liens. I mean, you may have a copy or lease, you could have an accounts receivable, an inventory line of credit that's provided by a bank, and you could have a piece of equipment that's financed by a vendor. So it's not unusual to have multiple filings on a UCC search or record for a company.
Great. Thanks, Marci. And of course, they're going to list out if you had any lawsuits against the business, judgments, of course, where you're registered and incorporated, and of course, also if the business has filed any bankruptcies in the past, either with the state or the county courts. All right, so we go to the next slide. So, yep. So this gives you an idea of regulations for business credit. And it gives you an idea that, you know, business credit reporting agencies still have procedures in place for the following. It gives you just 3 items. And it's much different than personal because personal is much more regulated than the business credit aspect. So we can go to the next slide. Thank you. And this gives you just an idea of the difference. And when you look at personal credit scores across the board, it's a pretty good apples to apples comparison amongst the different agencies. But when you get the business credit scoring, it is not apples to apples. It can be very widely based on scoring ranges, rating systems, and different organizations may emphasize different factors. All right, so we can go to 27. Thank you. So if you are in business already, it makes sense to, you know, check with some of the agencies just to see what's reported. Just like anything else, we have folks that do bad things, and the only way you can find out that if something has happened is pulling a credit report. I had a business owner who had not checked his business credit report for a long period of time. And when I sat down with him and was having a discussion, I asked him why he had 2 businesses in California and 1 in Washington. And he asked me, what did I mean? I said, well, we pulled a business credit report and it popped up that you had businesses in other states. And come to find out, his information for his business had been compromised and people were using it to borrow funds even though it wasn't him. So he was thankful that we had uncovered the fraud on his account, on his credit information, so he could handle it. We were able to help him out after things got squared away. So that's, you know, it's always important to look at your credit records. Right? And why should you establish business credit? It'll help you create better relationships for yourself, with your suppliers, and with your customers, all the way around the board. Because a lot of folks use a credit report to help them make decisions. And the top 2 are the most important, of course, lenders, and then suppliers and shipping companies. Next one just gives you a slide about, you know, the small business, you know, who's using those credit reports and what agencies. You know, you have state and federal laws will impact you as a business owner. Companies provide credit reporting and analytics and scores, you know, help impact positively. Slide 30 there. Thank you. So kind of putting it all together, when you look at it, your personal credit has all those categories: capacity, collateral, credit history, conditions, and character. That's also especially important, I should say, the 5 C's of business credit are these: capacity, collateral, credit history, conditions, and character. And the bank and your lenders can look at multiple things. They look at your personal credit, they look at your business credit. And one that's starting to be looked at a little bit more, it's non-traditional credit data. And so what does that non-traditional data look like? It might start looking at, because you're starting out, they might look at your utilities, your phone service, your rental data. Because if you're a renter, that's not on your credit report. Versus if you own a home, that mortgage payment shows up. So you're still making a monthly payment, just like a mortgage individual, but you're not getting credit for that on a credit report. Of course, they're starting to look at online business reviews, your shipment volumes, e-commerce trade, and merchant account transactions.
Hey, Mike, can I add something?
Go ahead.
Here?
Yeah.
I mean, one of the things that it's not listed here, but I'm just thinking about for some of the participants is that you might not realize is, particularly if you're working with a bank or if you're establishing a new vendor relationship, is how important the management of your personal and business checking accounts are. So that, for the bank that you are working with, that is a non-traditional data source, because if you have maintained a good checking account history with a bank, if you have kept a reasonable balance, and probably most importantly, if you have avoided an overdraft history, those things are going to be very positive indicators. If you don't have a lot of credit yet, but you have maintained a bank relationship and handled your checking account well, that is something that can be looked at as maybe like a mitigator or something in terms of a positive towards any loan application that might be more on the edge. And I've actually personally, I know in establishing vendor relationships, many times a credit manager will ask for a credit inquiry of a bank, and you'll have to fill that out and provide a bank contact, and they will contact your bank. And the things that are on there are things like, how long has your checking account been with the bank? Do you have any credit available? What are the average balances? And do you have an overdraft history? So that information is really important when it comes to establishing new vendor relationships. So I just want to mention that, because that's not something that's here on the slide, but is extremely important if you're looking at starting a business, or you're already in business and might be looking to expand your credit. So I just wanted to mention that. It's not obvious to people, but that information is in your history and ability to manage your checking account is very important.
Perfect. Thanks, Marci. And so the next slide here is, different lenders have different priorities. So knowing your lender that you're going to, you want to make sure you're working with a lender that might be familiar with what you're doing. Of course, when you're working with a lender, you might work with the bank that you're already at because you're familiar with that individual. And that individual at that financial institution, I always say, should be your quarterback for you, helping you with the process to make sure you're ready to be successful in your loan application. And so, because some lenders are going to emphasize other data over some will look at your personal credit report higher than the business credit report, because they're looking at it, well, if you're not being financially responsible on your personal side, why would you be any different on your business side? So knowing those kind of differentials in lenders and what they're looking at can be the item that makes your loan request a success. So we can go to the next slide. And so kind of key points to remember Best practice, the next slide there. There you go. Thank you. It's highlighted green, of course, is maintain that healthy credit, is pay your loans and other bills on time. You know, I can't, Marci can't, and everybody else, you know, can't stress that enough. And if there's going to be a hiccup, it's better to talk to the institution that the hiccup's going to be with and work with them so they can work with you. We talked about, you know, keeping your outstanding and revolving debt balances low, you know, pay off outstanding collection amounts. If there's something out there that's a negative note on your report, make sure you check your credit report to make sure there's, you know, what is on your public record, you know, is there a bankruptcy? You know, what happens if someone accidentally filed a bankruptcy on you and it wasn't you? If you don't check your credit report, you don't know. So we go to the next one. And then best practice, of course, when you're looking at opening up your business, know your credit, know your lender, understand what your rights are. And the next slide is just a little bit better sample credit report added to the deck, just because the other one, unfortunately, was a little hard to read. For those who want to come back and look at that. And then the next one is just on the business side. If you want to check, if you have a small business, you want to check, it gives you how to go to the different websites and get that information. And then the next slide gives you an idea of if the information is correct, is it incorrect. Then we'll take some notes, and there'll be ways you can dispute the information that's reported. So it's important that you check. If you have a small business and you haven't ever checked, you might want to check. And here's a form that if you printed out the deck, you could use to help you. And that's just part of more of the same slide form. And we're already down to questions. We've done doing this for 50 minutes. Time flew real quick while we were doing this. So I'm hoping some folks have additional questions here now that we're at the end.